Today's webinar, we're going to talk about African aviation. We've had a few requests over recent months to do an African-focused webinar, so that's what we're here for today. And we're going to talk to you about some of the data that we're seeing, and I'm sure there'll be plenty of interesting thoughts and questions that arise. In order to do the topic justice, I'm joined as ever by John Grant, OAG's Chief Analyst. Welcome back, John.
Hello, James.
Well, let's explore whether there is some opportunity to realise some of that opportunity. With that said, I'd like to welcome Ogaga Ujo back to the webinar. It's been a while, Ogaga.
It's been a while.
Yeah.
Thank you so much for having me. I'm looking forward to the conversation, especially on a continent that I love. So looking forward to it.
Great. It's nice to have you back. Okay, so in terms of what we're going to talk about, there's a lot to do justice to, and we will not be able to cover everything, but we'll do our best to pinpoint what we think are the sort of insightful, interesting things that are happening. But please do fire your questions over to us as we go. So we'll take a look, as we always do, at scheduled capacity and frequency and how those are changing, and put Africa in context with other markets. We also want to look a little bit at airline business models. We obviously have seen in the last couple of decades significant growth of low-cost carriers in other markets. We're going to explore a little bit of that for Africa, and then talk a bit about some of the challenges and opportunities, as we've already hinted at. So let's dive in. So global picture, as we usually give you on these webinars. So at the moment, capacity for this summer is looking like it's global level going to be 3.3% ahead of 2024. And for the year to date, so just January to March, capacity was 3.1% ahead. What we've seen in both Africa, Europe and the Middle East is a slowing down of domestic capacity. So actually some contraction across those regions, different reasons behind that. But strong growth taking place, reasonable growth taking place in domestic markets in Asia Pacific and in North America and Latin America. Latin America is leading the way there, and I think the majority of that is Brazil, domestic growth in Brazil. Internationally, that's really where growth is happening this summer. Every region is expecting positive growth this summer, and you can see there's a kind of range of different things there, and there are obviously different drivers. Strong growth in the Middle East, partly because of the work underway to transform Saudi Arabia. Strong growth in Latin America. Some of that happening in different parts of the continent. We're coming to the end of the high season in the Caribbean. We're still seeing strong growth though in Mexico, Colombia, internationally, to and from the US and other markets there. There's reasonable growth as well to Europe. And then Africa, which is our focus today, international capacity up 3.5%. Anything to add to that, John?
Towards the future being vague, airlines not being able to give any indications of future earnings, the profitability for 2025. It's a really, really strange situation we find ourselves in. And I think if we look at the summer, then, there's clearly some downturn in consumer confidence and demand across the transatlantic market, which is lucrative for so many airlines. But capacity hasn't changed over the last 2 months. So I'm doing everything we possibly can to look at how airfares are falling year on year. It's a really difficult situation the airlines face.
Sorry, John, we are having some problems with our listeners not being able to hear you. We're working on a temporary sound solution at the minute, so it's not ideal. Can the other speakers hear John? Ogaga, can you hear?
I can hear John a bit better now. It was a bit difficult earlier. I note a comment asking if John is in Iberia, so I thought that was quite funny given the power outages yesterday. But maybe just to... But perhaps just to comment on here on the global outlook, I do think it's interesting given the headwinds that we're expecting, especially given the geopolitical noise and the big T word of tariffs. But I think the industry is kind of buffered against that. But also noting that this is the year where, for the first time ever, globally, there's an expectation of over $1 trillion in revenue for global aviation, and of course, improved profitability. So I think the outlook is still, and performance is still fairly strong. We definitely might see some headwinds, and some of these factors seep into forward bookings going forward. So it's definitely an interesting to watch as peak summer arrives, and I'm very keen on looking at the performance throughout the year.
Yeah. Let's look then at specifically at Africa, as we promised. Here we have got capacity and frequency changes for this summer. We have got split down by sub-region. You can see that actually, with the exception of Central and Western Africa, all other parts of Africa are seeing some capacity growth and some frequency growth. So really, the impact that's negative is Central Western Africa. And we'll dive into what's driving that as we go on in terms of the slide deck. I've also just noticed we're having all the gremlins today. I did have percentage changes on these charts. They seem to have disappeared. So we'll make sure we add those when we send out the final version. What we actually saw in Eastern Africa is a sort of greater, you generally expect that frequency and capacity will both be growing, although capacity will often grow at a slightly higher rate. It's a bit faster in Eastern Africa, and so there's also a move in the average seats per aircraft as well, although fairly small.
Is this not characteristic of all African aviation problem, in that the market never right sizes the fleet type to the market size? So we end up with sometimes brand new 737-800s purchased by a government, or an A321XLR with 180 seats, when the actual demand profile is perhaps nearer to 100-seat aircraft. So we're constantly seeing too much capacity being put in the market, and when that happens, notwithstanding all of the political issues and things such as taxation and the charges for airport services in Africa, it just makes it very difficult for any commercial airline to be profitable.
Okay.
Yeah, if I can jump in here, I think that's definitely the case. To your point, right sizing, I think the region has been going through that process at different rates of momentum post-COVID. COVID really forced that rationalization across all models and all types of airlines, be they private, state-owned, or something in between. I do think the trend will continue of capacity growth, both at a seat and total level, increasing quicker than demand, simply because that's how the industry plans. But I think from an Africa perspective, there's generally been a gap of 20 to 30% in terms of supply versus demand, which is just not efficient. And I think that stakeholders and investors are requiring their airlines to right size that a lot better. That also talks to what's happening in terms of the fleet world. I think that as airlines, particularly in the region, are trying to rebuild their base, even more mature airlines that were stronger in the past, newer regional carriers coming in and extending that, there is more fleet rationality in terms of size of aircraft. But I think we're definitely seeing some of those outliers still in the system around aircraft that simply just don't fit certain networks. So I hope that this rationalizes over time, but I do think that what is happening from a fleet perspective in terms of acquiring aircraft, leasing rates, those kind of valuations of fleet across the board are improving, even with some of the issues around the big T word of tariffs. I think that's built into the system. And realistically, if you're trying to get aircraft, even via lease in many respects, you have a long lead time. So airlines really still have to deal with almost 5 to 10-year planning horizons for any aircraft, and African carriers, save for a couple of handful, don't necessarily have the leveraging power to move themselves along some of those slots as well. So it really is, what's been interesting to see and working with clients is that there's been a significant amount of improvement in terms of lessor relationships with African clients, be they state-owned, be they private. And I think that this partnership should rationalize this capacity going forward.
More now than ever, there is turmoil in the aircraft market, whether it's maintenance, supply, leasing, purchase. And so I think actually, you know, if you're in a position that many African carriers are in, and we'll talk a bit later about fleet age and aircraft orders, you know, not having that ability to leverage the importance of your fleet replacement over a bigger nation or a bigger region that is experiencing rapid growth, and there's a few of those.
Absolutely.
You know, does not make for it's another constraint on a market where there are already lots of constraints, and I think how do we, you know, how does African aviation get past that challenge? And you're right, you know, to some extent it's about building understanding, building relationships, and educating the market to some extent about the potential.
Yeah, I think you've hit the nail on the head there, particularly when you mentioned the power in terms of countries. And I think just from a quick bird's eye view, African aviation globally, comparatively, has, I would say, almost the most exposure from a sovereign perspective across the aviation value chain, not just in terms of, you know, quote unquote state-owned airlines. And even that looks very different. You have complex models like Egypt, for example, which is a state run and government owned. It's a state entity, it's a national carrier. However, they have very diverse shareholders, including, you know, from your LSGs, etc. But ultimately, I think this is where the development angle of aviation comes in. For years, the industry has called for some sort of platform, leasing platform capacity development around leveraging the bargaining power for African carriers. But at the back, I think what has been good to see is that the sovereign support and the multilateral system has really come into play here. I don't think we are where we need to be in terms of a market-wide product or market-wide platform. I know between African Development Bank, entities like Boeing, AirCap, there has been a lot of work like that over the years. But essentially, governments have understood that it's not simply good enough to go to an entity and ask for money or capital. There's other forms of assistance. There's guarantees. There is technical assistance. There's all of these elements that really enable better credibility, better relationship, and a mitigated risk in terms of financing the acquisition of aircraft. And I think there's been quite significant stuff there. Maybe on this, I'd like to highlight Nigeria, which from a numbers perspective, we know there's some softening demand. There's a bit of a localized structural issues that have continued. But just this year, Nigeria has been really, really significant in their efforts, and intentional rather in their efforts, in terms of getting the financial industry to support. So from looking at ratification of different policies and rules, to effecting Cape Town Convention and actually utilizing it in certain cases, to just even hosting the whole finance and leasing industry in the country, as well as in Dublin earlier this year at Airline Economics. So there's a lot of work that I'm really happy to see with sovereigns around enabling the environment for better kind of financial support. And I think there's a bit of a clear understanding between now. I'm happy to see that with shareholders and sovereign investors understanding what their role is in terms of the enabling environment, because effectively state-owned carriers have an operational basis a commercial basis rather, to operate from, and with very weak balance sheets but very strong backing from their sovereigns. I think there's a lot of creative ways that that's being employed. But yes, the factor of risk still needs to be dealt with, particularly from a leasing perspective and an acquisition perspective.
It's so important, isn't it, that actually, I guess when you're inside the industry, we know that aviation and airlines specifically don't operate in a vacuum. They having alignment between all of the stakeholders, and that extends to, like you say, the investment community, the government, and all of the different players in the system. It's really important that everybody's on that page. Okay, let's move on to our next slide. And this was just looked at the African carrier landscape. So someone's just asked a question as to what percentage of African, a bit of an echo here, so apologies for that. I'm just going to see if I can play about with the sound setting. That might be better. I think the echo has gone, and I might have temporarily muted John, but we'll for you, John, I think. Okay, so we'll have to just live with the sound issues. Somebody just asked a question about what percentage of African commercial aviation is handled by non-African carriers, and I'll give you the figure in a moment, but essentially what we're showing here in this slide is the top 20 carriers in Africa by seat capacity, ranked by April 25, and those carriers' position back in 2015. So there's been some significant growth, but of interest, I think, here is that 8 out of those top 20 are domiciled outside of Africa. And I'm just going to tell you what the percentage of the total capacity in April is. So
why you calculating that, the biggest challenge is those carriers have a disproportionate impact on the market in terms of either their strategy, their market position, or their ambition for Africa. So, Emirates and Qatar are very much about 6 trillion traffic flows, feeding their respective hub airports. Ryanair is very much, as we know, an ultra-aggressive, low-cost carrier, serving essentially leisure demand, very seasonal in its operation, very, very quick to drop a destination when it no longer performs, or the rebate or subsidy that it receives from the government or the airport disappears. And that makes it challenging for the locally based airlines who are trying to compete in that environment, but with very different business, sometimes political and strategic national interest, that they are trying to support. It's such a tough market for an African-based airline.
So on that stat, 55% of international capacity is operated by African domiciled carriers, and overall 68% of African capacity, that includes domestic and international, is operated by African domiciled carriers.
Yeah. I think that's a very interesting point, and just segue into your data point. That figure really hasn't changed over the years. So we know that at an international level, to the minimum, that's actually where African carriers operate. However, the international market actually drives African aviation. So I think that's a really interesting relationship. And regionally, of course, that's where a lot of African carriers are not just increasing their networks, but also building back into their base. And here I mentioned South African Airways, as we can see, has probably been the biggest shift over the last 5 years from business administration, South Africa's version of Chapter 11. Emerging out of that, there was a private equity consortium relationship where the government was going to dispose of 51% to the consortium. That ultimately ended up dissolving due to both parties and disagreements around valuations. But SAA has come out of that with really a clean balance sheet, right? Government absorbed a lot of those contingent liabilities, and they've been operating strongly on a operational and commercial basis. They're a lot smaller of an entity, but they're absolutely a healthier entity. They're always one to watch. They have really focused on their strategy in terms of building back slowly. They've just announced additional, I think, 20 aircraft deal with AerCap in terms of narrow bodies, and they have also just mentioned looking at wide body returns. They have submitted a plan to the government, which is kind of under wraps, seeking about just 125 million US dollars for a capital injection. I note that this isn't far off from the figure that they had sought throughout the previous strategic equity partnership deal. So I think the majors are really one to watch. We have the large network carriers, national carriers that are mature, and they're having to find different cycles of new growth. Ethiopian maintains a strategy of not just network growth, partnership growth, but also acquisition-led growth throughout the various corners of the continent. I think the Ethiopian and Etihad deal will be one to watch. I think it's fair to say that there's not one that's purely on commercial basis. I think there's more of a strategic platforming that is happening there. And that's what a lot of governments consider when they are making such decisions. SAF Air is also interesting. Although it's right up there, SAF Air has just started reaching its foray into regional markets, and that's still within Southern Africa. Yes, they have some operations to, high your leisure volume markets, but really they're effectively a domestic carrier, and now as a broader Southern African carrier. So that also shows that some of these carriers, even your Ryanairs and EasyJet, they actually concentrate in certain areas. So I think the network carriers are really one to watch. SAF Air, with its size and its significant growth, it's really driven the South African market into a new space, but they are limited in their network. EasyJet and Ryanair effectively only focus on North African routes, which are tourism and short destinations from their respective bases, whereas the network carriers do a little bit of everything. So I really like this slide, and I love this information because it talks to what you mentioned, the churn. There's a lot of dynamism in the market, and also the momentum is also multipolar, right? We're seeing it differently across different regions, across different types of entities, and of course this really represents all of the changes that are happening in the market as well. And I think overall there will be some consolidation, especially from the larger majors, or that consolidation looks different in terms of vertical and horizontal integration as well.
I think the other interesting point there, Ogaga, is that having an effective regional carrier or collection of regional carriers that serve the market properly with right-sized aircraft, for me, is part of unlocking the potential, because low-cost carriers, and we'll talk about them and come on to talk about them, you're absolutely right. In North Africa, they're serving a particular market, and it's about bringing inbound tourism largely to Morocco. But actually, and you know, I've been involved in conversations, and I'm sure many of those listening will have, about, you know, is low cost the right model for Africa? Is it the right model for regional connectivity? And there, to some extent, the comparisons to what's happened in Europe, what's happened in other markets, are they helpful or not? You know, do they reflect the different demands of the populations of some of the larger cities?
But is it it's the interest? Take West Africa as an example. Is it in the market's interest in the long term to have 3 or 4 capital cities competing for hub type status network? Does that actually provide the best level of connectivity for West Africa when, because they're all competing, none of them actually creates sufficient critical mass for daily frequency to destinations throughout the region? They don't operate at the same time of day to those destinations because they try to serve different markets. Is that the thing that can happen? Or are we, to Agaga's point, would it be better to have a regional airline that is located in West Africa, has a base in just one location, but provides the levels of service and connectivity that region needs? You know, and theoretically, would a merger of Kenya Airways and Ethiopian Airways create a mammoth hub in the new airport in Addis Ababa that would better serve East Africa? Question mark. These are, you know, these. If we're constantly chasing everyone's own agenda, nationalistic agenda, then by default, we're going to end up in a situation where there's always churn and no one is actually making the returns they should do.
Yeah,
absolutely. I think you've raised a couple of points in that, John. And to Deirdre's point, I'll try and separate the two on LCC and versus the hub chasing. I don't know how many times I've seen the word hub come from a country, and we absolutely cannot have 54.
Everyone in Africa wants to be a hub.
And
it's the first 3 letters of anything.
Exactly, and you know, from countries that currently even have little to or nascent aviation markets. But I think that there's evolving understanding on that, right? So maybe to talk to a point on West Africa is not a region that struggles from bilateral issues for the most part, right? There's a lot of utilization of fifth freedom and some instances sixth freedom rights, but it is a market that has other barriers. I guess we can call them non-trade barriers, which include, you know, taxes, fees, and charges, right, from the different airports, and that becomes a real barrier for broader development. Airlines like ASky, of course, with the Ethiopian backing, as well as the Ethiopian network support and feed, have really become an interesting model to watch. But again, the market is not catalyzing the way it should be, given all of those elements that are good. And this talks to your point, other barriers that are put in place when it's not just barriers in terms of liberalization or bilaterals. In terms of the hub strategy, what I do think is important in terms of kind of analyzing the problem. We cannot have 54 aviation hubs, but noting how governments are investing in infrastructure, there's typically a platform play around some sort of concentration, right? So Namibia, for example, they have a strategy of being a logistics hub for Southern Africa, given the economic makeup. The airports and maybe airline in the future forms some part of that. But what is important to mention, I think, from a high level perspective, is that Africa is a market of 1.5 billion people. It is the world's future workforce in terms of market location, but we have less than 3% of global traffic share. That math is not mathing, to speak colloquially. So what has been interesting to see is how governments are having some of these discussions as part of South African Airways' previous attempt in terms of restructuring. And I think even conversations going forward, there was a discussion around South African Airways and Kenya Airways having some sort of strategic partnership. And what I'm happy to see is that partnerships have different levels, and there's different level of understanding from what I can see. It might not necessarily be equity, but it could be leveraging other things to generate economies of scale and scope. But to your point, with the economic makeup as well as the urbanization makeup of the continent, which is not monolithic, which is fragmented, which has certain mega cities that are concentrated and a lot of large secondary cities, this all falls into play in terms of what is the real opportunity and what is the catchment. So I like to often tell airlines of different sizes, whether they have aspirations or not, private or public, that, you know, your catchment area is more important at times than thinking about becoming a hub. As long as you know what your feed and defeed and your network should look like, what your base looks like, and what you're trying to achieve, I think the hub discussion needs to kind of fall by the wayside. But absolutely, in terms of the geographic 4 or 5 corners, in terms of the majors that are at play, that's effectively where the hubs are. Even when you look at new carriers operating, the first thing they try and do in their expansion efforts is go into one of these hub markets. So I think the bag is very mixed, but chasing a hub to no end is also not smart in my view, but understanding what the catchment area looks like versus a hub or network point. And I think that talks to the LCC question. In short, I don't think LCCs are the answer for Africa, and even LCCs that exist in the market, one can argue that they have slightly different models in terms of deviation. I must say that I don't think the label of a model is that important in the region, because what you find is that regional carriers, low-cost carriers, network carriers, they all kind of have in some shape or form a gray area in terms of the model. But in terms of the kind of long-haul, low-cost model, I think there's certain opportunities, you know, your Cape Town seasonally, your North Africa seasonally, like we've seen. But in terms of the LCC proposition, what is contingent on that? Contingent to that is distribution. Contingent to that is high volume, right? Contingent to that is secondary airports in the rest of the world. Africa simply just doesn't have that makeup. So I think that the future model for Africa will be hybrid models. Perhaps Airlink is an example of this, a smaller regional carrier. I would say they're developing some hybridity in terms of becoming more network oriented, having to think about connecting passengers more, having to think about their new partners, whereas they were purely before a regional carrier that had a franchise relationship. So I think there's a bit of blurriness in all of the models that are operating, but I do think a hybrid model of addressing Africa's, you know, key network points, secondary, tertiary markets, smaller aircraft, but not a high volume, low cost typical model. I don't think that's the future for Africa as yet.
There's a lot to unpick there, isn't there? I want to, and my thought on one of the slides is from about 5 minutes ago. So bear with me, and I'm going to just try and illustrate some of that, because I think it's a sort of relevant point, and we'll come back to this slide again towards the end. But I wanted to just, somebody had made the point about the lines of connectivity in Africa. What we're showing here, and this was based on a piece that we did about a year ago. I think OAG put out a piece of content that looked at the connectivity within Africa for international services. This is just simply a measure of the hubs in Africa with the most number of African countries served, and they're ranked on that basis. So that we generated this list of 5 airports using that metric, and you can see, you know, this in one sort of sentence for me encapsulates when you've got 53 countries, and actually you're only serving, you know, only one hub is serving a considerable portion of them. The others are all serving half or less. Therein lies the scale of the challenge. Therein lies the historical flows of you know, of flights that have evolved. So we'll come back to SA-ATM and Yamoussoukro shortly, because I want to go back to the LCC slide, which we were coming to. And I think your point, Ogaga, is the label isn't important, and I think to some extent we're guilty, perhaps us, because we spend a lot of time looking at how comparable regions are, in the interests of, you know, trying to understand if a pattern emerges in one region or one part of the world, will we see a market evolving in the same way elsewhere? It's really stark when you look at this. Is just LCC share of capacity by region, this April versus April 15. You know, it's really stark when you see that the global average is 35% LCC capacity. Some regions are above that just because of how their markets have evolved. Obviously, you've got the Ryanair, Wizz, EasyJet story in Europe. You've got high penetration in Latin America as well. And, you know, driven by those very big domestic markets. And in Asia Pacific, if we broke that down into the sub-regions of Asia, Southeast Asia, Northeast Asia, you would see a much higher penetration in Southeast Asia.
Why troubles in Africa full stop? You know, LTCs, sales, credit cards, still a lot of transactions in Africa are taking place at a travel agency or even at the airport the day or 2 days before travel. So it's, you know, that's a very different problem.
Absolutely.
I think they are.
The level of GDP per capita is not yet there. So all of those comparisons about, you know, the size of the fleet in Africa, the size of the aviation industry relative to the size of the population, tells you that, and theoretically, instinctively, it feels to us like LCCs should be a great way of tapping into.
If you draw a comparison. Yeah, if you draw a comparison with somewhere like Central Asia, where, you know, GDP has also been quite low until recently, and it's now growing with more reliance on oil and service-based industries. But if you look at Africa, it isn't just the distribution; it's the crippling cost of airport charges and taxation that makes it really, really difficult for an LCC to survive. It makes it difficult to create the efficiency of a 35-minute turnaround. Any airline, you know, LCC wants a 35 to a 45-minute turnaround. Try doing that in Lagos. Yep. You know, you've still got regulators on the plane checking that there's this piece of paperwork.
Hard enough to do in Luton.
But it might well be. But you know that hits the efficiency. An LCC needs all of those constituent elements to be working smoothly without impediment, and you can lose an aircraft in an African airport for, you know, hours waiting for a particular piece of paper or a regulatory approval to depart, particularly from health authorities who, you know, have the ultimate say. So it's really, really difficult for LCCs to get a share. And it doesn't even matter if it's an LCC or a legacy airline. It's exactly the same conditions they have to face.
Absolutely. That's such a critical point, John, that you mentioned, just in terms of the realities around operating, right? I was at a session here in DC last week. There was a World Economy Summit, and Scott Kirby, the CEO of United, was speaking. And they actually asked him the same question about LCCs in the US, because, you know, their performance is looking very different to network carriers here. And the question was asked, you know, is there a future for LCCs in the US? And he had this whole kind of thesis around many aspects that you mentioned, John, around, you know, look, as network carriers, there's a buffer of the cost that we're able to absorb. And some of that, yes, we pass on, some of that we absorb, but LCCs simply don't have that option, right? And they're exposed to the same taxes, fees, and charges. That's in the US. Now, compound that, you know, times X amount in the African perspective, where margins are so thin already, operational constraints are already what they are, which is very different across the region. Johannesburg is like, you know, any global competitor in terms of an airport, but there are many other markets that are very different, right? And on top of it, there's a cost element of taxes, fees, and charges that are really seen in many countries as a pure revenue line, not even at times passing on or covering the cost of operation. I think that makes the LCC model tricky. And just from a pure demand perspective, a big part of the LCC model isn't stimulation, right? Going to a secondary market, putting capacity and stimulating some sort of mini pseudo network, or even if it's just for that segment. That's really tricky in the African context because the key markets serve many of these major hubs, right? And already well served, already fiercely contested with different models on it. So I think that there's some of those elements which will lead to more of a hybridity. I do like the kind of low cost basis approach. However, low cost and low fare are two very different things. We've seen that with some struggles of previous carriers, even Kulula, well-known Kulula was not that financially strong. It was not financially sound. It rested on its British Airways franchise, which was a long-serving, long-standing LCC that doesn't exist. Mango under the SAA brand. So even the more successful ones have typically been housed under some sort of network carrier, other carrier. So that's why Safair for me is really a fascinating model, because they've taken they've leveraged the structure of South Africa, which is different to the rest of the continent in terms of a large domestic market. They've also leveraged all of the e-commerce elements that you would expect from a competitive LCC, even using things such as WhatsApp, for example. And now they're almost like building a slow base incrementally into the region. But unlike the typical low-cost carrier, they're not flying in with capacity. They're essentially adding capacity that is opportunistic or similar to what a network carrier or even a regional carrier would do. So I think even the low-cost approach in the continent will be very regional specific, might even be country specific, and that will impact how that develops and its kind of overall penetration into the African market.
One of the challenges we have in Africa generally is that most cities only have one airport. So the LCC carrier is competing against a legacy and a national carrier in exactly the same market, wing to wing in terms of scheduling quite frequently. So there is no differential, whereas, in London there's multiple airports, even in Bangkok there's multiple airports. And that makes a big difference as to how the competitive field plays.
Absolutely.
Yeah.
Turnarounds and all of those things. So,
yeah.
And pricing. Okay, let's move on to the next slide, which is what we talked about international growth being stronger than domestic across most markets, and we wanted to just take a look at the source region for African international flights. So, where is the growth coming from? Where's it happening? Capacity, and this is flights, frequency, not capacity here. Flights within Africa internationally are contracting. Strong growth from Europe, as we've talked about, that's largely Morocco. Tunisia is also seeing strong growth, Algeria too, and some of that is low cost driven. The majority of it's low cost driven, with Transavia, Ryanair into Morocco, and EasyJet and Transavia into Tunisia. Strong growth from the Middle East, and actually we've just expanded that out a little bit into the sort of key Middle East markets. Exceptional levels of growth, partly because Qatar are joining the dots on their network and trying to position themselves in their competitive market where everybody wants to be a global hub in their region. Steady growth to the UAE, and pretty strong growth to Saudi to various points, North Africa and beyond. And I think we're going to see that continue, aren't we? As there's continued, you mentioned earlier, Gaga, that Africa is a new growing source of resource for the Middle East in terms of workforce. typically we've seen a lot of Indian subcontinent migrant workforce moving into the Middle East, but that's evolving. And actually, as there's a development of the service industries in the UAE and Qatar and in Saudi in particular, there's growing demand for service-related employment.
Absolutely. I think this is such an interesting slide, especially given the one on the right with the breakdown in the Gulf. And to your point, Deirdre, yes, I think there's the element of, the aviation majors, right? The Emirates, Qatar, even Turkish, they've tried different ways of penetrating and growing the African market. And Qatar, not just using network, but also now acquisition driving growth. Emirates not really following that, but dealing more with select partnerships and just the sheer size of their network have also struggled given their capacity limitations because they're too large. So I think this talks to two things. On the almost like consumer level, to your point, the diaspora market is increasing, whereas the Middle East, particularly UAE, Qatar, and Saudi, in many ways, especially the last two, in many ways were transit hubs. They are now also growing in terms of O&D demand themselves, because a big part of the diaspora market, upwardly mobile professionals, migrant workers, traders, are actually, their O&D is within these markets. And I think that has also supported the network transition effect of these markets. I think Saudi has a slightly different perspective. Simply, again, it's large. It's got a strong O&D element from many carriers, or rather from many countries in the region. You have a large Hajj and Umrah market that is still going to increase and is trying to be served better. So I'm really keen on looking at what this looks like in the future. And even though I would say Etihad is an interesting one in terms of their partnerships, the way these carriers invest, they really do invest beyond, I would say, the network, right? And Etihad is probably the prime example of that. Etihad has not had the best past in partnerships, especially those in the continent, especially with SOEs. And I think a lot of that falls to their own business case and operation. But
journey, I think.
Exactly.
That's an extremely polite way of describing what they've been on. They've been on a roller coaster of one disaster to another disaster, and now maybe things are getting better. But I think what's really interesting is that growth that you see in those Middle East markets. It's what is driving all of the low-cost carriers in the Middle East to place orders for wide-bodied aircraft, because going back to this point about there are limited alternate airports in many of these capital cities in Africa. The game is not about multiple frequencies to different destinations. It's about high density frequencies to existing destinations and a lower seat cost, so you can compete with the Emirates and the Saudis and other such people. And I think that's really, what we're going to see. I think the Middle East is perhaps the only place in the world that can sustain really long-term, low-cost, wide-bodied services because of the migrant workers coming from Southeast Asia, the religious traffic going to Saudi Arabia, and that makes a big difference. So it's going to be an interesting dynamic when those players get their aircraft in 3 or 4 years' time as to where they deploy them first. Do they go to Jakarta? Do they go to Manila, or do they go to Addis or Lagos? That will be really interesting to see how that shapes out.
Absolutely. Definitely one to watch.
Thank you. Talking of where, because I've got 2 more slides I'd like us to get through, and I'm conscious of time. Talking of where aircraft are being deployed, one of the markets, I'll just skip back to this one for one moment. One of the markets, which is very small by comparison to the others in terms of source region, is North America, up 46% on 2019. So we're kind of skipping around here in terms of time periods that we're comparing.
Become aware 46% increase in capacity, because something will happen.
we've got to we've got 55 minutes in without mentioning the elephant in the room. I've really ruined it for myself now, haven't I? Anyway, okay. Well, you see, Gaga, you mentioned tariffs way back at the start, so I'm fine.
Yes, I said let me rip off the bandit and just call it the big T word early on.
Yeah,
So
yeah, that covers all bases, doesn't it? Okay. So what we're seeing really with this, and this is not just the rise and growth of Ethiopian expanding the dots on the map. This is US carriers bringing growth into Africa, and this is a list of the routes that are new in 2025. This is really riding on the back of two things, isn't it? One, and I feel like I should just give this a bit of an asterisk. The strength of the dollar, it's all relative. It's all relative, and a sort of renewed desire. And this is not necessarily revenge spend, because that's done and dusted for sure. But this is about post-COVID people reevaluating travel and the bucket list things that they want to do. And I think we're seeing that in lots of other markets, aren't we? So while people may have said previously, you know, I was talking to somebody yesterday who was talking about the extent to which travel has opened up to the strength of the dollar has meant that travel has opened up to a bigger segment of the American population than previously. And carriers, some of the US carriers have got capacity to be deployed.
Well, this is China's fault, isn't it?
Yeah.
Because, you know, the Chinese market to the US has nosedived. It's 1/4 of the capacity it was in 2019. The US carriers have had to deploy some of that elsewhere. It's also because some of the airlines have been acquiring new fleet in recent years, which gives them the range length for a Joburg or a Cape Town. And don't underestimate the importance of customers redeeming frequent flyer points to destinations such as Marrakesh and Rabat and Cape Town and Joburg to do those iconic once-in-a-lifetime type trips. I mean, who would, you know, if Airbus was selling an aircraft to a new airline 15 years ago in the US, they would never have had Marrakesh as a destination unserved, waiting to be served. You know, things change so quickly, but it's really, really interesting to see how that flow has grown in recent years.
yeah, I think that the growth is interesting, particularly coming from the market in the US. But what we also know is that they are the airlines that will follow the money the most in terms of direction and aggression, right? So I think it's also a bit more nuanced than like your VFR type of traffic. There's significant business amongst these countries. I think United is a really interesting model, and their market penetration approach has been interesting. For years, American Airlines have creamed the West African markets, some key Southern African markets, especially in peak seasonal times. In fact, they've been criticized for putting poor product on those markets. And because these markets are lucrative and they've been growing, you're actually seeing some of the best product and better schedules deployed. I think United in particular is interesting. As a Star Alliance carrier, they had obviously a great relationship with South African Airways prior. And with SA going out of the market, as much as they're rebuilding back, they only plan to come back to the US next year via Accra, as they've mentioned publicly. So the United has really taken one of not just the largest, but also the most lucrative African markets and really aggressively increase their strategy. I think on the Johannesburg Newark, it's not a new service, but basically they've delinked one of their Johannesburg services and routed it via Cape Town for the summer. But they've been playing an interesting, almost like direct link Cape Town, Joburg, Washington, and Newark operation over the last couple of years. But effectively, they are serving Cape Town, Johannesburg, both via DC, as well as Newark, and it's sometimes chop and change that capacity. They've also gone back into West Africa quite aggressively last year. I think Delta is trying to play some catch-up game there because United has really boosted some of their market share, especially on the top end RBDs on both economy and as well as other cabins. I think it's also interesting that they mentioned United just last week that, look, they are seeing domestic softening in terms of the consumer domestic demand, but the international demand and international bookings are actually ahead of where they were for the next 2 weeks. So that's this week and next week and another week for June, July, and August. So for the whole key period. So they are resting, particularly given the geopolitics, they're resting a lot of their growth and revenue on international as well as premium traffic. So I expect more of this to happen. I think Ethiopian is also holding strong in their various network growth. They're, of course, competing head to head. But Ethiopian is also responsible for a lot of this through traffic. Although we're not talking about the UK now, but I think that's a key one with the UK. Exposure to Gatwick, Heathrow, you're seeing a lot of traffic coming via Ethiopia to Southern and East Africa. But sticking with the US, I think they are following the money. They are following where the market has not been served. And I do think that this will be extremely hard for South African Airways to compete on when they do get back into the market, because as we know, the market doesn't wait for anyone.
Which begs a long-term question. What is the international long-haul market for South African Airways? Because they will get murdered on European sectors. They will get murdered in the Middle East. They will get murdered on North American traffic. That leaves them with what? Not a lot.
So I think that South African Airways is going to build back to what they were good at, right? Previously, there was quite a lot of elements of inefficiency in the network, but right now they operate to Brazil and they operate to Australia. So it's very clear that they're still trying to utilize their positioning, especially for some of these east-west flows. It is still the quickest transit point in terms of Asia to South America via Southern Africa. And that's why these are the two markets they've gone back to. I do think that North America will be challenging, but it is absolutely necessary for SAA's network, given their regional base, given the OND flows, and given the bilateral power that they have. So I think if they're going to compete aggressively, it's going to be there. Europe, even previously, Europe was always a tough one for SAA. They relied significantly on the feed and defeed from the Star Alliance network. I do expect, though, that they would go back to Germany because they had 2 points in Germany that actually did quite well. Heathrow, of course, was very competitive, but that is expected to come back to. I don't think Europe will be an extensive network, and I think it's one that should be served with co-chair capacity and perhaps maybe 2 or 3 key points. But I think they should continue doing what they're doing, which is building back slowly and building back to what were actually served as network assets. So it's good to see that they're being quite incremental in that approach, because as we know, I mean, the quickest way to bundle an airline's profit or to erode an airline's improvement is through long haul network options that are really expensive. And from a fleet perspective, they just don't have the assets to do so right now. So hearing some of the rumors around some A330s coming into the system, that will certainly support that expansion. But I think it's also contingent on capital injection from either the market or a shareholder, or a mix of both.
Very interesting to watch. Hopefully not too many murders in that process. I'm conscious of time. One last slide that I just wanted to leave, perhaps as a parting thought or some parting thoughts. We took a quick look at fleet by region. I told you we liked regional comparisons. And the grey in the top chart is active aircraft in the combined fleets in these continents, regions. And then on order is the yellow at the top, and the numbers here reflect the volumes that are on order. So pretty low volume of aircraft on order, and we talked a bit about that earlier. When you marry that up with the average age of the active fleets, it's a bit alarming, isn't it? From an African perspective.
Is it opportunistic to identify this as the region of the world for historical flights? in the coming years.
The golden age of air travel.
Maybe. It's an extremely fluid situation, isn't it? I mean, there's 100 Boeing aircraft apparently that aren't going to go to China at this moment in time. So, someone could step into some of those. It looks like Air India Express have already put a marker down for 10 of those aircraft. But it's just the nature of Africa, isn't it? It's been the uncertainty that doesn't allow for the confidence to build, that means that the investment isn't being made. I mean, how many African airlines can definitely say they will be here in 10 years' time?
Yeah, I think it's definitely a mixed bag in terms of risk, the probability, and the impact, right? There are some real risks. I think we've seen the record of performance, right? Airlines that have ceased, airlines that have struggled to pay, etc. And given where the fleet market is going, the aircraft are, the valuations are improving, getting them is more difficult, and you're competing with a lot stronger competitors globally. I do think though that there needs to be more work from the community in terms of perceived risk, and as an area that I work in quite strongly, it's fascinating to see that there are several countries in Asia, South America, that have similar ratings to many African countries, but they don't get as much support from a fleet perspective, and not even that, when they do get it, costs are ridiculous. So the cost premiums for doing business in African aviation on average 5 times more than globally. And yes, there's some real risks in there, but I think there's a lot of perceived risks that markets simply need to evolve. But with that said, I think that given where things are going, people are holding on to certainty as best possible. So they're going to hold on to their assets as best possible. They're going to be extending their leases earlier to have these in their fleet. There are some opportunities in terms of aircraft on the ground, but this just, I think, expedites the need for the enabling environment for the financial sector and African aviation to do better work, because it's going to be harder, to your point, to secure these assets going forward, given all of the uncertainty.
One of the opportunities is, of course, the COMAC aircraft that seems to be gathering pace and coming off a production line. And given that no country likes an offset deal more than China, and particularly with African nations, maybe we shouldn't be looking at Boeing and Airbus, but actually some brave opportunities for COMAC to get some mass in Africa.
Opportunity, yes. Supply chain is another question. Regulation is another question. I think if you look at a Boeing aircraft, it represents the global supply chain, right? And Airbus. And I think clients are definitely looking at that. Countries are looking at that. But they're also very clear that we need a supply chain that can support, and we need a financial sector that can support. But I do think it's certainly an opportunity in terms of new build. And I think that given some of the geopolitical changes, there just might be some fruits for a lot of African carriers who are leveraging their geopolitical power in many ways. And aviation, I think, will be one of those that receive such benefit.
Yeah. I'm afraid we're going to have to leave it there because we're definitely out of time now. Thank you. I feel like we could have carried on this conversation for another hour. Maybe we'll come back and revisit the topic. I think there's lots to be said, isn't there, and lots happening in this exciting market. Thank you, Skaka, for your insights. Great as ever. We will definitely not leave it as long till the next time. And thanks, so John. Much. Thanks to our audience as well for persisting with us despite the difficulties. And we'll see you all on the next one.
Thank you.
Thank you so much. Thank you to all the listeners and viewers. Bye-bye.